Good evening and welcome to this session of the live learning classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. It's nice to be back here and nice to see all of you wishing me with all of you. I'm not going to read all your names for want of time, but I really appreciate your call. In fact, I got Anmol Patwa. Somehow he's got it translated and he's given it in different script. Wonderful. Nice talking to all of you. And today we will continue the discussions on audit and auditors, right? So yesterday what we did, rather in the last class, what we did, we spoke about the qualifications and disqualifications of auditors. Qualifications and disqualifications. Also, we spoke about the appointment of auditors. We began with first auditor, and then we also saw subsequent auditor, and we stopped there. So let's go to that place. Unless you have any doubts or any questions to be asked, you are welcome to ask. And otherwise, I will assume that you are aware. As I told you, disqualification is pretty important. So especially the security limit and all that. So we saw appointment of first auditors. Then we stopped here, I think. We stopped here. I also mentioned to you that the auditor, so Karthik AR also wishes me. Thank you. He's sitting in Bangalore. Wonderful. So I'm back to Chennai, B2C. You are B2B, I'm by B2C. I'm back to Chennai. Now the point is, I told you what is the significance of the words until conclusion of first AGM. Until conclusion of first AGM. So, until conclusion means the post of auditor should never be vacant. Meaning the existing auditor, we will call him, I'm so sorry. I'm very sorry. The existing auditor, we'll call him incumbent. Incumbent means the person who is now occupying the position of auditor is called incumbent. The guy who's going to come in would be the successor, right? So either the incumbent who is now currently occupying the position would continue, he'll be reappointed, or the new guy, the successor, would come in and he will take over. But all that has to happen during the AGM. The AGM cannot end without reappointment of the auditor. Rather, if the AGM ends without either reappointing the auditor, then this guy will continue, right? Or the post of auditor will become vacant with the penal consequences, right? Please understand. So this is something very important. Post of auditor, if the board of directors does not fill the post of auditor, they are liable to penalty. So either incumbent continues or there is a new guy coming in. One thing should happen. Am I correct? So here is a question that you might want to take. Silvertongue Solutions Private Limited was incorporated on 7/4/2021. The board of directors of the company held a board meeting on 17/4/2021, wherein they appointed Mrs. John Jacob and Associates as the first auditor of the company for a term of 5 years. State the validity of the aforesaid situation. Possibly this is a little ahead, but still let us see if any of you can answer this question. But actually you can answer it. Because you know that the first auditor, see, this was incorporated on 7/4. On 17/4, they are holding the first board meeting. So, and at the first board meeting, Silvertongue Solution is an other than common company. So, within 30 days, the board is appointing John Jacob Associates. All is nice. But why do we say it's invalid? Answer is correct. Patsati gives the right answer. Srinivasan is giving correct answer. A is the correct answer. B is a tempting wrong answer. B is a tempting wrong answer. C and D are clearly, sort of C is clearly wrong because other than government company, no need for central government involvement at all. B is a tempting wrong answer because it looks nice now. Valid approval of shareholder in general meeting. See, the first auditor is appointed by the board. If there is a failure by the board only, the first auditor will be appointed by the shareholders. If even the shareholders don't appoint, what happens? There is a penal provision. Okay. So the correct answer is A. A. Yeah, Nagaraju is again going by 30 days. See, be careful. That is where the exam, you have to read the question again and again. For how long can the first auditor be appointed? The first auditor is appointed only for 1 year, not even 1 year, I don't even say 1 year. The correct answer is till the conclusion of first, and he will hold office only until the conclusion of first AGM. Whereas here they are appointing him for 5 years. Therefore, it is invalid. Have you understood? Correct. What's that? So that is the correct answer. First, so you know the answer. But 5 years is there later. When you go to the subsequent auditors, then you will find those subsequent auditors can be appointed for 5 years at a time, but not the first auditor. First auditor appointed, I'm not going to use the word 1 year. He will be appointed by the board within 30 days to hold office till the conclusion of the first AGM. From the first AGM, a conclusion of the first AGM to the sixth AGM, which is 5 years, he can be reappointed or some other auditor can. Right? Here's one more question. The managing director of PQR Limited wants to appoint Mr. Sri Ganapati, a practicing chartered accountant, as first auditor of the company. Comment on the proposed action. Okay, this is not a question created by me. There are some questions created by me, but this is an exam question carrying 2 marks. Correct. So many of you have got the answer. Priya wants to know, can I start with this lecture when I missed my previous sessions? Yeah, I suppose you can. See, what you missed is the qualifications and disqualification of an auditor. You can always go and listen to that lecture and come back. So don't miss this lecture. Continue. But maybe if you ask me something very fundamental, I may ask you, but let us see. If you have any doubt, kindly sort of, what I suggest now, you just watch and wait. In case you have a genuine doubt, Priya, which I can clarify quickly, I'll clarify. If I'm saying something which is based on last lecture. Correct. Vatsardi, Mr. Vatsardi is very, very active today. Wow, I'm so happy. And Anmol Patwa also. No. Rito Banerjee. Correct. Here the problem is MD alone cannot appoint. See, MD has substantial powers of management. You will learn about it when you come to final. But those substantial powers of management are restricted. In some, he cannot do. Clearly, what does it say? Yeah, Priya, you can take a photograph of this slide, because this is something which is not part of qualifications, which could become relevant later for subsequent auditors. So the same format will be used for subsequent auditors also. So who appoints, in the case of government, CAG, then board of directors. So here, board of directors straight away. So in both cases, you have to remember that it is the board of directors. Sorry. It is the board of directors, not the MD alone. Not the MD alone who will do it. Okay, good. So some question was asked. First auditor cannot be appointed for, yeah, you are right. Ninan Desai wants to know whether the auditor appointed by the central CAG is a government employee or private. A private auditor, not necessarily a firm. It could be a proprietary, but rarely will it be a proprietary, because the Controller and Auditor General will have certain criteria for selection. For empanelment with the CAG, compulsorily you need to be a firm. Therefore, it will be a firm. That firm should be eligible. So they have certain criteria, empanelment criteria in terms of number of years of experience. But it's basically a private firm of chartered accountants. From the panel, the CAG will appoint. Okay, good question. And that is how it is. Okay. Yeah, those of you who are attending this lecture for the this is your first lecture, don't worry, please continue. I'm telling to everybody who is attending this lecture and did not attend the earlier lecture, no problem. Continue, just concentrate, then go and listen to that video, download that video and watch it. Chalo. So you got it. Now, this is one more question. Can Harish Chandra wants to know if first auditor can be subsequent? Why not? Why not? There is a concept of rotation. We'll come to that, but that is not applicable to all companies. So to answer your question, the first auditor, even then, the first auditor can be the subsequent auditor. No problem. Okay. So 139(7) CAG within 30 days is the date of registration. Next 60 days start from. It's a good question you're asking. My view is that the board of directors has got CAG got 60 days, then board of directors got another 30 days now. So at the end of the 30 days, they're 60. So members' duty, or else you can take it as 60 plus 30, 90 plus 60, 150 days. Let me also take a rain check on this. I'll check up and get back to you. So you could have a view like you can say, the other class I explained that 60 plus 30 plus 30, 120. Now you can say 60 plus 30, 90 plus another 60, 150 days. 60 plus 30, 90. Board of directors also does not apply. Then another 60 days. From the end of 30 days, you begin another 60 days. So 150 days. Whereas here, 30 days, then another 90 days. So 30 plus 90, 120 days. Okay. So you can take it that way also. I'm not saying. In the next class, I'll confirm it to you, whether it is 150 or 120 for government company. For other than government company, it's 30 days board, failure, then another 90. So 30 plus 90, 120 days, it has to be done. Thank you, Ms. Mansi, for those kind words. But it's okay, no problem. And who will audit ICAI? Seriously, I don't know. But it will be a form of chartered accountants. It will be a form of chartered accountants. Okay. Because it's a body, because I know this because the SIRC is audited by a firm of chartered accountants. Not any firm, any member firm would audit because they're on rotational basis. So now, a company's members list includes the following shareholders. You have Bank of Baroda, a nationalized bank holding 12%, National Insurance Company Limited carrying on general insurance holding 10%, Maharashtra State Financial Corporation, a PFI, a public financial corporation, holding 8%. So totaling 12 plus 10, 22 plus 8, 30. Advise the company whether the provisions related to appointment of auditor in case of government company. So basically the question is whether this is a government company. Clearly, it is not a government company. See, they are all government-owned entities. No doubt about it. They are public sector undertakings. One is a public sector bank, the other is a public sector insurance company, and the third is a public financial institution. But to become a government company, the 51% of the paid-up capital should be actually held by government, either central or state or combination. Here, that is not so. Therefore, since it is not a government company, the provisions of auditor of government company are not applicable to it. Okay, right? Correct. Now we move on to the next concept of subsequent auditor. Subsequent meaning at the conclusion of the first annual general meeting, you have to appoint the subsequent auditor. Now, the auditor will hold office for a period of 5 years. Earlier, in the old law, auditor was appointed for only 1 year at a time. Then every year we used to, at the AGM, we will reappoint. Now, for subsequent auditor today, the provision is easier. Once the firm is appointed or the proprietor is appointed, he will be there for 5 years at a time. He can be reappointed for another 5 years. Later on, little bit later, we will see a concept of rotation of auditors. Means where you can't have the same firm after the 5 years and all. We will come to that. As of now, get it very clear that an auditor is appointed for 5 years. he can be reappointed for 5 years at a time. That's all. Okay. Got it? 5 years, then onwards, 5. So this, obviously, the provision for government will be different from other than government. Let's see how it works. As usual, for government company, what happens? Okay, for the sake of clarity, I'll mention it here. This is government. This is non-government. Wow. So in case you have a doubt, this is government, this is non-government, right? So it's a government company. The CAG should appoint within 180 days of commencement of financial year. See, think about it. Current year, 22-23. Let us say that a government company is there. It's ready, not the first year, subsequent year. The auditor would be appointed now. He would be no auditing. That gentleman will hold, that firm will be there till they will audit till 31st March. Am I correct? And they will present their audit report, the AGM to be held in 24. The audit which is going on now, believe me, it will be going on very seriously now, December, January, February, because they have to finalize it. Then March, there will be a lull. Then again, April, May, June, heavy work, because we have to finalize by June, July, so that the board can approve it. Then it has to go before central government and all that, because they have to see it once. And because just like that, they won't permit the MD to sign. So everything will be done. CAG will do a sort of a broad review, but nothing much. Then auditor will sign. So by that time, that will be the first AGM now. In the meantime, from 1st April onwards, you count 180 days. From the commencement of financial year, you have April, May, June, July, August, September. So before that, 30th September, the CAG should appoint. So CAG is given 180 days. So during the time, this old guy would be finalizing the audit, everything, blah, blah. Before the last date was 30th September. Now, before that date, the CAG will send a letter to the company, government company, saying, you reappoint them, this firm itself, or we have now given you another auditor. This is the new auditor. So that the new auditor will be informed, and he will be appointed at the AGM before 30th September, and he will continue from the conclusion. So so at that AGM in 2024, there would be a auditor. Either this guy will continue or a new firm will appoint. That subsequent auditor will hold office until conclusion of next AGM. So for government company, no 5 years. For government company, it is only 8 year, 1 year. Okay, that's all. Every year there will be a. But as a matter of it's a matter of policy, the CAG generally reappoints the same auditor for 3 years. Means the audit is allotted for 3 years. Once that firm becomes auditor, for 3 years they'll be. So almost after 3 years, there will be a cooling off period that they may not get an audit for 1 year. And then again they'll take. This is policy of CAG, not law. This is a policy of CAG which could be changed. So the point here is, so as far as law is concerned, every year within 180 days, CAG has to appoint, and the auditor will be appointed at the AGM. And see, CAG appointment means the CAG will send a GO to the letter, an official letter to the company's board saying, appoint so-and-so, this so-and-so, terms and conditions, everything will be fixed by CAG. And all that you have to do is contact those firm and start the audit. Give them the records and all and start the audit. Now that auditor for 24 March should be appointed at the AGM of 23 March. Am I correct? And so before that, they have to nominate this guy. Either this existing guy will continue or a new guy will. So this is for government company. For a non-government company, in the first AGM, the members will appoint. After the first auditor, thereafter board has no power to appoint an auditor. Auditor is always appointed. Only the first auditor is appointed by the board. Because initial, so they are given that power because at that time there may not be many members also. So, 1 year you have your guy. But first AGM, the members will again. So to answer another question that was asked, whether the existing auditor can be the first auditor can be subsequent, he can. But if the members want a new guy. And that subsequent auditor who is appointed at the first AGM will hold office from the conclusion of the first AGM till conclusion of 6th AGM. Right? Will hold office from conclusion of 1st AGM till conclusion of 6th AGM. Right? So this is the, so from 5 years. 6th AGM would be the 5th year. Am I correct? The 1st AGM, then 1, 2, 3, 4, 5, 6. Because 1st AGM only is appointed, yeah. So 2nd AGM, 3rd AGM, 4th AGM, 5th AGM, 6th AGM. At the 6th AGM, he can be reappointed or another guy can be. Again, I am telling, with caution, I am telling, general rule, 5 years at a time, forever also. But in certain cases, in the case of certain companies, there is something called rotation of auditors, where the same auditor or the same firm cannot be appointed for more than 5 years or 10 years, as the case may be. What are these types of companies, and etc., etc.? We will see it in a short while. Okay. So some of you who read the Board of Studies, the material, you will know it. So don't worry, I will tell you. But abhi to nahi, because that will come later, at a later point, I will tell you. Right now, let us understand this first. What is the point of audit of subsidiary of government company is also appointed by C&AG? Yes, sir. No. Yeah, correct. Because why logic is that subsidiary of a government company is a government company. No? So that also will have to be appointed by CAG only. So this is, I'm answering this on pure logic. Your question, Mukteshwarji, I'm answering on pure logic. Subsidiary of government company is a government company. For government company, this is the rule. Okay. What's the point of having auditor during financial year? Because it's actual work. Sir. This is where you have to link it with auditing. Hello, brother. Boss, my audit is going on now for my auditees. I cannot wait till 31st March, ma. No way. If I do that, I'm gone. So what we normally do, we will take up the audit. So, for example, if I'm appointed, see, actually, that most of the clients, they know we will be appointed. So even in June, July, we will start the audit. Assuming that we'll be reappointed, we'll start the audit. Or rather, see, June, July, the whole year, the finalization will be happening. Around August, we'll finalize that. And then they will come and give us the appointment letter and then say, sir, start immediately. So, because already 6 months ka accounts hai na, we have to audit it, boss. Volume is there. I have to go through the ledgers. I have to see the interim report, balance sheet. So many things, and events should have occurred during the year, which need understanding. So believe me, audit can't wait till 31st March. So his actual work starts after the end of financial year. No, have a reality check. Or maybe when you join audit firm, I'm sure if you're not already an article clerk, you will know. See, around this time, interim audits will be going on. Means we'll be going for half-yearly audit or quarterly reviews, continuously audited. For a large company, huge company, minimum 2 of my boys will be always sitting there. They'll be always sitting there. And one manager will be monthly 2 times at least, he will go and sit there and talk. What's happening? How are you going? What is the position? When can we start up? Finalization, etc. Planning will go on. So very, very powerful, thing. Auditing is. So that's what I'm saying. Link this topic with your auditing paper. Then you will understand. Good show. So 1/4 of the subscribed capital of AMC Limited was held by the government of Rajasthan. 1/4. Mr. Neeraj, a chartered accountant, was appointed as an auditor of the company at the AGM held on 30th April 2021. Wow. By an ordinary resolution. Mr. Sanjay, a shareholder of the company, objects to the manner of appointment of Mr. Neeraj on the grounds that it's a violation of Companies Act 2013. Is the objection of Sanjay tenable? No, 1/4 means what? 25%, right? 1/4 is 25%. 10/4, 2.5 into 100, 25%. So, 25% is only held by government of Rajasthan. Therefore, the argument of Sanjay or the view of Sanjay is not tenable. What is the procedure to be followed in case the central government also holds 1/3? 1/3 is 0.33. So 1/4, 0.25. 0.25 plus 0.33, 0.58. Sort of 0.858, 88, because 0.3333 na 3.3. That is 1/3 is 3.3, 0.3333. This is 0.25. So it will be like 0.283888. 0.28333, I think. Whatever. So 283 will round off to 280. Whatever it is, it will become 0.58. So 0.58 is quite more than 51. So if central government also holds, that's why I've sort of highlighted this also. Okay, also holds. Good. In fact, earlier, I did not know how to use this pen thing. And that too, my screen was not a touch screen. So I needed to have a separate, pen tab or something like that. So now I'm really enjoying myself doing all this type of, luckily I'm not doing stick figures on the screen. You know what? I have to, for CAC's Institute, I have to cover accounting. For those people, I take accounting also, corporate accounting and all. There they are insisting that I should use whiteboard and know all that. Buddha ho gaya was. How can I learn all these new tricks? This old monkey cannot learn new tricks here. Anyway, so this is the procedure for appointment of auditors. So very good, very good. Many of you are giving nice answers here. CAG will, no sir. No, for which one are you answering? Correct. For the second one, if the central government is also holding, then the procedure is the CAG will appoint within 180 days, and such an auditor will hold office until the conclusion of next AGM. See, this question in the exam would carry 3 marks. 1 mark for telling Neeraj's view is not tenable because it's in the government company. Another 1 mark for saying that once this central government comes, it will become a government company. Another 1 mark for writing these 2 points. That's all. You will get, for 3, you will get 3. If you write neatly 3-4 lines, you will get 3 marks. I'll tell you one secret. Suppose in the question paper, you find questions which carry 2 marks or 3 marks and all, no, answer them. Suppose a single question, 6 marks are divided into 2, 2, 2, or 5 marks is divided into 2 and 3. Answer that question, because it's easier to score for small questions. And one more thing, psychologically, the paper character also will feel, hey, 2 marks, give it. So then finally, suddenly you'll find he's giving you a lot of marks. And you will find that you are way up above the 50 issue, 50%. Thereafter, you can't go back and touch. So he will start catching only those long answers, where it's quite possible that you made a couple of mistakes and you will start scribbling also and all. There, he may, even then, if the answer is well presented written, he'll give 90% of the marks, 80% of the marks. So that will leave only with those questions where you don't know the answer at all, where you will write last, write those questions last, don't write them first. You are sure you don't know, you never studied it. Srikanth also didn't teach, or whatever you feel. Finally, I might have taught, I don't know, but it may be, it might have been taught, whatever reason 100 in the exam, or maybe you have studied the topic, but the question was asked so confusingly, you did not know what to do. Chalo, no problem. Keep it last. Don't avoid answering. See, suppose you have to write 8 questions. If you write 7 questions, you are only eligible for 7 questions ka mark. For the 8th question, you will get 0. But suppose you write something for the 8th question, 1 mark here. You think 1 mark is not big? Because finally, I have to make up the run rate. 1 run is good, 2 runs are good. I'm catching up with the opponent. So, in a matter of 3 runs, I can win the match. So, don't ever underestimate the power of 2 marks or 1 mark and all. It's pretty important in the exam hall. Good. Moving on. Somebody has started Hindi, boss. Yeah, no Hindi, only English. Otherwise, bye. I know I would love to teach in Hindi, but my contract with the institute prohibits. So argument ends here. Sorry, Pratimesh. Already so many people are there. They all know my view. So don't waste your time, my time, arguing, please. No Hindi. If you cannot understand English, chali, what to do? Believe me. A very good question is asked. What kind of resolution? Friends, if it is special resolution, it will be clearly mentioned. If it is a special resolution, then I would have clearly written here, members at first AGM by passing special resolution. So to answer your question, no special resolution, sirf ordinary. Okay, very ordinary resolution. There is no very ordinary resolution. Okay. So to answer your question, again I'm saying if it is special, there will be a clear-cut mention. If nothing is mentioned, it is ordinary. If they simply say resolution, it's ordinary. For ordinary resolution, they wouldn't say ordinary. Sometimes they might say, but sometimes they might simply say by passing a resolution. Then it is only ordinary. Suppose it has to be special, then they have to mention. Where the section says only resolution, you cannot impute special. But if they want special, they should add special. Here, it is only ordinary. Okay. So before appointment, you have to do certain things. It's a procedure. This is also very important from auditing perspective. In the auditing paper also, you will find pre-audit formalities are there. No? This is one. First thing is, you should get an appointment letter from the client. Or you should get a letter from the client informing you that we are proposing to appoint you and we would like to know whether you are consenting to it, and also whether if we appoint you, whether you are qualified to be appointed and whether it will be in accordance with the conditions as may be prescribed. So before appointing, the company will write to you. Technically, they should send a mail to you, or mail is also okay, or a letter to you saying, we are proposing to appoint you. So kindly give your consent in writing. Also a certificate that if the appointment is made, it will be in accordance with conditions as well. You know the conditions now. All the disqualifications should not be there. Qualifications should be there. That is obvious. He should be a member or a firm which majority CA, and he should not suffer from any of the disqualifications. Lastly, the number of audits should be within the limit. We saw that now per partner 20, not including private companies of certain category, like what are they? OPC, government, small, and 500 crore paid up share capital, less than private companies, only private companies. Other than that, all fellows you include. With this, your 20 should not be exceeded. So they will ask you to give a certificate. Thereafter, they will send you a proper appointment letter. Then, after the appointment, then the company shall inform the auditor of his or its appointment. Right? Usually very format, and that's important because that's an engagement letter. And that goes into the permanent file of the auditee. Which has to be properly maintained. And see, may not be a permanent file. Today in a document handling software, this would be a separate area in the software where you can access it for all references to the terms of reference for the audit. So that will be there in that appointment letter. Very important. It lays down the terms and conditions, the contract. Believe me, all said and done, appointment of auditor is a statutory matter. But still, once the auditor is appointed, now it is statutory, now, but thereafter, the relationship is commercial, contractual. The auditor is a service provider. And as such, the client has the right to demand certain quality from him, certain things from him. Nothing wrong. Except that this being a very, very technical thing, like a lawyer or a chartered accountant or a doctor, there is only so much that the client can control. Because beyond that, it's a professional, yeah. What then you do like that is, see, if it is a matter of maintenance contract, an engineer can understand. But if it is an audit, the financeman can understand. So the CFO may put certain more conditions. He might say anything that you discover should be disclosed to us, like that. More importantly, the company may want a NDA, non-disclosure agreement. Are you able to understand? So I'll tell you one thing. Auditor is the ultimate insider. Today morning, I'm not joking. The joint managing directors of one of my clients were sitting in my cabin. We had a discussion over coffee for 1.5 hours. And they were completely telling me the next 3 years strategy, what they are going to do, how they are going to do. And listed company. Can I buy the company share? Now you understand why the disqualification is there? No, I cannot buy that share. Okay, maybe a relative can buy up to face value 1 lakh. The point is not that, yeah. See, it's ethics now. So why they are discussing? Because they have confidence that a member of the Institute of Chartered Accountants of India will maintain confidentiality. So they, okay. Chalo. You remember I mentioned appointment includes reappointment. So whenever we use the word appointment, it includes reappointment. So when you reappoint him also, the same procedure needs to be followed. Appointment auditors and director, declaration of dividend considered exactly order resolution. Correct. Appointment of auditor and director, declaration of dividend. Yeah, they are all ordinary only. Regarding this, the director matter, we will keep it pending. One situation, director appointment of the directors in the place of those retiring is an ordinary business, ordinary resolution. Okay, ordinary business, ordinary resolution. So question is appointment of auditor and director, declaration of dividend, consideration of and adoption of financial statements is ordinary resolution. Other than this agenda, don't go there. No, don't do that, don't do that. Don't make assumptions like that. Your first statement is correct, Priyaji. These four matters are ordinary resolution. Any other matter is, see, I think you're jumping to the next topic, inshallah, which I'll be taking it after I come back from Dubai. The point is, see, special ordinary business, four matters are there. Anything other than that is special business. But don't conclude that automatically it is special resolution. You got it, Priya? I want you to confirm that you understood what I said. Don't mistake me, because if you are in my regular class, I will know you, I will see your face. I will know that you have understood what I said. But now I can't see your face. So it's a grievous mistake that you are making. And it's a common mistake also that not only students make. I've seen many professionals do this. So, madam, these four matters are special ordinary business. At an AGM, these four matters are ordinary business. Other than AGM, these are also special business. If you're appointing an auditor at an EGM, special business, but still ordinary resolution. So your statement that these four are ordinary resolution, I cannot deny. But your statement that other than this, what is that? This agenda comes under special resolution, no. I can't say. It may. There are some matters which are ordinary, some matters which are special. That will be decided by the section. So if the section says ordinary, special. Got it? So don't make such sweeping assumptions about special resolution. But one thing, other than these four, all other matters and any other meeting and even in AGM are special business, but not special resolution. Okay? Thank you. I saw now I got it, sir. Because I don't want you to go out of this session with that wrong notion. And not only should you be there clarity, if anybody tells you also, you clearly tell them, no. Especially if a company secretary tells you, tell them and they won't. They will know it. I'll give them that much. Okay. Good show. Appointment of auditor and director. One second. I saw it. By shares with 1.2 lakhs in CA. That's not fair, yeah. And a wife buys 1.2 lakh in CA, husband's audit clients, so he doesn't come home late. Baba, he's not coming home late. No, that is not fair. See, fellow has to earn his livelihood, yeah. Otherwise, how he will feed it? Anyway, it's a good, it's not humorous also, because I'm a practicing CA. My whole, what shall I say, livelihood will go in. No. But one more thing is that, see, if the wife does something, how can the husband control? That is something that we have to. So, like that, wantedly, if the wife keeps buying more than, but then remember, 1.2 lakhs face value, not market value. So that wife must be so well off. Think about it. If this lady is capable of buying 1.2 lakh face value, see, for example, Infosys, 5 rupees, let us say, you are saying it's 5 rupees face value, agreed, sir. So if you want to buy 1.2 lakh worth 5 rupee shares, how much you have to pay into the market? You check out the number and tell me. 1 lakh 5,000, yeah. So 1 lakh 5,000 divided by 5 into 1,500. Roughly. So it'll be like, it's like 105. That's all right. You just flip the scale. Divided by 5 rupees is the face value. Into, today, let us say, for example, 1,500. Oh, the number zeros are too much. So which means if that lady is capable of doing it, then she must be very rich. So with such a rich wife, why this auditor should even do audit? Let him stay at home, enjoy. Anyway, the auditor shall, okay, forget all that. Now, certificate. Once the auditor is appointed, then the auditor shall submit a certificate. We said, na, he has to give a certificate na, before he is appointed. In that certificate, which is to give, he should say that the individual or the firm is eligible. Means they are members of the Institute of Chartered Accountants of India, is not disqualified for appointment under the Act and the rules and regulations. The proposed appointment is as per the terms provided under the Act. Means within the limits laid down. Do you remember the 20 limits? And the list of proceedings against the auditor or audit firm or any partner of the audit firm pending with respect to professional matters of conduct is as disclosed in the certificate is true and correct. So they should clearly mention in case there are any. See, remember, there may be disciplinary proceedings pending against the firm or auditor. Nothing wrong. Somebody may make a complaint and he may be defending himself. That doesn't make him bad. Okay, so they're only telling pending. There may be, because some clients cantankerously and maliciously they might prefer complaints and proceeding may be going on. So not a problem. But whatever is there, they should inform. So and so matters are pending like that. But believe me, the number of disciplinary proceedings being what it is, 95% of the auditors, I mean, maybe around 80% of the auditors will give nil. There will be no proceedings against them. Okay. Including, you see, when we apply for the bank audit in the multi-purpose empanelment form, they will ask us, are there any matters, any proceedings against you with the disciplinary domain? None, nil there. Yeah, see, Nagaraju does the calculation. 2250 lakhs. 2250 lakh. Number of zeros is too much, na? The ladies, and that's only one company. That's only one company. Okay. He has to do all for all the companies. Anyway, see, look at it. A meme, we are not laughing. Being chartered accountants, you and I, we are taking it seriously and doing the calculation. That is CA. So we can't sit back and enjoy that joke. We have to do calculations. Anyway, chalo. Now, who will appoint the auditor? Normally board. But who will recommend the appointment? Usually board. But in certain cases, certain companies should have something called audit committee. This audit committee is a very important committee. It is not in your syllabus. As you can see, 177 is way out of your syllabus. So, but all you need to know is certain classes of companies will have to appoint audit committee, right? This audit committee is responsible for appointment of the statutory auditor. So they will select the statutory auditor based on the criteria need. They will also, that's what I said, that the terms of references will be given by the audit committee. What type of qualified staff they want, what type of work needed, how the reporting will, I mean, the statutory audit reporting is different. They may also ask for certain other reports or frequent progress report or commitment to attend the audit committee meetings and review all that. So who has to appoint an audit committee? All listed public companies. So all listed public companies should have an audit committee. And companies that are required to appoint at least 2 independent directors. That is in addition to listed companies. Now there are other see, for a listed companies, not less than 1/3 should be independent directors. 1/3 of the board should be independent directors. Okay. So in the other cases, at least 2 independent directors shall constitute the following companies. So we have, which are those companies? All public companies with a paid up capital of 10 crores or more. Or all public, not listed. If it is listed, even if it is less than the limit, they have to appoint. Unlisted public companies with a paid up capital of 10 crore or more. All public companies having turnover of 100 crore or more. Or all public companies having in aggregate outstanding loans or borrowings or debentures or deposits exceeding 50 crore rupees or more. Okay. So, public companies with paid up capital of 10 crore, public companies having turnover of 100 crore It's not very big. 100 crore is not very big. All public companies having an aggregate outstanding loans or borrowings or debentures or deposits exceeding 50 crore. Okay. So such public companies should have an audit committee where don't worry about this nomination and remuneration committee. It's part of your slide that I'm just sharing here for knowledge purpose. You will not be tested on this in the exam. But what you should know is that where the company has the audit committee, then such a company, the competent authority is the audit committee. Where the company is not required to constitute an audit committee, then the competent authority is the board of directors. So where the company is required to constitute, where it's either a listed company or satisfies one of these criteria, then audit committee. Otherwise, board. That competent authority shall take into consideration the qualifications and experience of the individual or the firm proposed to be considered for appointment, and whether such qualifications and experience are commensurate. Commensurate means equal. Suppose you don't want commensurate, I don't like commensurate, then use the word equal. Equal. So you don't like commensurate, no problem. Use the word equal. Okay. But the minute you put equal, the proposition will become two. Just remember that. Unfortunately, English, there's something called proposition. So with is a proposition, two is a proposition. So when I say commensurate, I will say with, commensurate with. But when I say equal, then I will say with such qualifications and experience are equal to the size and requirements of the company. So that is unfortunate English. So equal to the size and so if the size is huge, then the audit firm's capability and experience should also. For example, unless that firm has audited a company with 1,000 crore turnover, how they can audit another company with 1,000? But this is a big chicken and egg question. So when will they ever get the experience of 1,000 crore company? Unless they do 1,000 crore company. So this is a big chicken and egg situation, right? So auditor A has never done 1,000 crore. So if a 1,000 crore company says, I will need only 1,000 crore guy, then that first audit, who will give him? Anyway, this is a bigger question. So maybe they should compromise and say, okay, chalo, they got enough experience and at least they've done 500, 600. Let us take a risk and take this guy first time. Then somebody has to give the chance to somebody. Okay, 25 years ago, 30 years ago, somebody gave this fool a chance to audit the company, they made me an auditor, and then the experience starts coming, right? This is a big chicken and egg issue. I mean, no solution for it. I don't know. I don't have a solution for it. I just go there and I sit in front of the MD and he asks me, so Mr. Srikanth, you want us to appoint your firm as auditor? Yes, sir. So what experience? I give him some. No, our company is 600 crore company. Have you done 600 crore? No, sir. I've done 300 crore, 400 crore, but not 600. Sorry. Okay. When this time I like your face, I'll give you a chance. So then I do 600 crore. I prove him. He feels happy. Regularly, this guy is coming. So people are coming. They are responsive. Whatever negatives are there, also they report it in such a way that we understand the consequences rather than shouting at us and making us feel like some convicts are guilty people. They actually comes and explains what is the correct method and why you should prefer that rather than the approach suggested. Chalo, I like this guy. I mean, I'm sorry to share this personal experiences with you, but then this is my life now. Last 35 years ka life. Okay. It shall have regard to any order or pending proceeding relating to professional matters of conduct against the proposed auditor before the Inspector General of India. See, most big firms will have professional proceedings against them. Believe me when I say. But pending, okay, where the order has been passed, that's different. Okay. Anyway, it may call for such other information from the proposed auditor as it may deem. Nothing wrong. I'm saying you should check up whether that guy has got or the firm has got the competence and experience. Yeah, Lippa. And see, I'll come to your point. It's a good question. you found out all grammatical mistakes, then please tell why we use it. No, I'm not. No, I don't understand your question, Prince. Can you clarify your question? Then I will answer it. Are you asking a question or are you giving a comment? And which word you are talking about? So kindly clarify, I will answer. I need one more clarificatory statement from you, then I will answer your question. Surely. And nothing. I hope I can correct. If you think I should not be correcting your English, I apologize. Nothing. See, the word commensurate is a very long word here. See, English has two types of words. It has Latin-based words. Okay, Latinized words, which are long. Commensurate is basically a Latin word. It has its root in Latin. Whereas equal is the Germanic word. It has its base in Saxon and German as against the Latinized words. So Latinized words are long, whereas Germanic words are short and simple, right? So there is no big, shall we say, preference between the two. Some people like to use long words like me and Shashi Tharoor. Some people like to use short words. So if you are a person who likes to use short words, I'm giving you an alternate. Instead of using commensurate, you can use equal to like that. That's all I'm trying to tell you. Don't mistake. And see, just to help you, if you don't want to be correct, if you don't want to know good English, leave it. Okay, let us kill the English language. This is the only way we can retaliate against the British. Let's do that. Okay, let that be our fight against the British, killing their language and torturing it and destroying it. That at least we'll do. Chalo. Now coming to the point, why we use a LIP instead of an LIP? You mean LIP now? I don't understand. What is lip? Lip is this part of the. Are you talking about the organ lip? Or what are you asking? Or are you asking for LLP? See, it's like this, limited liability partnership. Limited liability partnership. If you're saying the word limited begins with a consonant, the word limited begins with a consonant, L. In which case you use A only, a limited liability partnership. But suppose you're making it an abbreviation and saying LLP, then L. See, the first L is not pronounced L, it's pronounced L. Therefore, that is a vowel, yeah. So that will have an LLP. So that is how it is. Okay, that's all. That is my best answer I can give you. The audit committee shall recommend the board for appointment. Yes, exactly. The audit committee will recommend the board, and then that the committee shall recommend the name of the individual. Then the board only, they will recommend to the board. Then the board will take it up and put it in the AGM notice for the subsequent auditor. For the first auditor, but at the time of appointment of the first auditor, believe me, there will be no audit committee now. Because, see, that is the first board meeting, yeah. In that board meeting only, they will form the audit committee. Got it? So that's what they can do. They can form the audit committee in one board meeting. Then that audit committee will go and do all this stuff. Then within 30 days, that audit committee should give a recommendation, and then the board should meet and appoint first auditor. Subsequent auditors, the audit committee will recommend, then the board will examine. See, once the audit committee recommends, that's it. It's a pure formality. That name will be included in the AGM notice. So-and-so auditor being eligible for reappointment is proposed to appoint so-and-so firm who are eligible to be appointed as auditors of the firm for the ensuing year or for the ensuing years till the conclusion of the AGM or for the next 5 years and close. Then that will be approved by the shareholders for subsequent auditor. Okay, so in case this company is not required to constitute an audit committee, then the board itself can appoint can recommend, and then the auditor will be appointed in the AGM. Okay, so that is how it is. Can Indian company appoint auditor from foreign countries? Who asked this question? I shall presume in your favor that you didn't attend the last lecture. The first slide I showed in the last lecture was qualification of an auditor. What did I say? That auditor should be a member of the Institute of Chartered Accountants of India. So if there is a foreigner who has become a member of our institute, salute him, make him an auditor. No problem. Citizenship is not a problem. But that gentleman or lady should be a member of our institute. Or if it is a firm of chartered accountants, majority of the partners should be members of our institute. Signing partner should be a member of our institute. Okay. So foreigner from foreign countries, a very vague term. So long as he is a member of our institute, he is from foreign country, I know. Okay. Thank you, Mr. Desai, for your kind words. Without affecting the flow of the class and wherever relevant, I like to share some practical thoughts. You see, that is the beauty of this, what shall I say, teaching now. You see, if you're just reading from the book, this interactiveness may not be there and you'll feel a little bored. So, believe me, I am following the tradition of some of the greatest teachers in this institute, including my own gurus, Professor K.S. Anantharaman, our own past president, C.A.R. Bhupati, our past president, C.A. T.N. Manogaran, our another past council member, our MP Vijay Kumar. So we were all teachers together. MPV and I were teachers together. So that was one generation. We were a different type of teachers where we used to, but then today it's a different, nothing is different. Still, the student is highly intelligent and wants to learn and is interested in learning. I don't think it's wrong to say, sir, to students today, no, not interested. Who said? You guys are also interested. And you have prepared, you are coming with a lot of preparation, and your questions are based on your preparation. So I love this. Chalo, now, this is not out of topic, Nagaraju. You are asking, does member have authority to remove the auditor? No members. They have, sir. They cannot remove an auditor. Please understand. A little bit after this, now we will be coming to resignation, removal of auditor. But remove, no. They have to go to the, because auditor is an important position. So the members or even the board or members should not be able to threaten the auditor and say, if you don't sign the balance sheet, we'll remove you. So removal, not easy. But if you don't want this auditor at the end of fifth audit AGM, you can have somebody else, one. But if this guy is so incompetent and you don't like him at all, like him is different. You may not like him, but his competence is good, then jolly well you have to take him. So if you incompetent, then yes, there is a power. There is a section where members can remove. But it is a very, very, very carefully laid down procedure. You cannot just like that write a letter to him saying, dear friend, we don't like you, get out like that. No. You can't just like that send the audit note. You have to give him enough opportunity to talk. Then he will also talk. Nah. You will talk, he will talk. Nah. He has so much information with him. Nah. Subject to confidentiality, he will talk. He will tell the tribunal, whatever I am now telling is confidential. But I have to tell it to you because you are tribunal and you are telling they want to remove me. Now tell me why if they are going to remove me, then let them answer these questions like that. I mean, once in a while it happens with companies. I'll tell you my philosophy. The minute the company I go there and I feel the pulse now, and I know that these guys are all fraud fellows and useless guys, then they will quietly say, hey, Baba, you find some other auditor who would be better for you than me. Because the minute I get into an audit with these guys now, one day or the other, that dissatisfaction is going to come because they will never be satisfied because I will not suit them. They want a guy who will suit them. I'm not that. So I will tell, they will say, no, we want you, we want you. Well, I would love to, but please, this is the way we protect. So you go there and become auditor for a rogue and then say he is a rogue. What is the point? You knew he is a rogue. Don't go. Don't even get into that audit. Don't get into a situation where you will be in trouble. Or else you'll have to do so much to protect yourself. You have to qualify. You have to do this so that the rogue will be unhappy with you only. He will never be happy. So why dissatisfy him? Let him have better auditor who will oblige him. Maybe go to jail. Let him do it. We don't have to do that. Okay. If all the members think like that, then there will be no rogues in the country. What do you say? If all the members say we will not sign, we will not be your auditor, then there will be no Ramalinga Raju. Am I correct, Dharma? Anyway, explain example 2 from page number. Hey, today I can't do that, because I don't have that material with me. Can you? No, I will definitely do that, Mr. Mitesh Kumar ji. Kindly permit me to make a note of this I will do that. But you see, like I used to say, no, even Ramchandra Murthy gave Ravan 1 day. You can give me 2 days now, 48 hours. Next class I will tell you. Even Ramchandra Murthy gave Ravan 1 day. He said, go today, come tomorrow. So to me, you tell, go today, come 2 days later. 21st May, I'll tell you. Aaj to, I don't have the question with me. Unless you are able to type out the question, no, don't waste your time. Next class, I'll tell you. 100%. Hitesh Kumar Boy from Western region. Wonderful. Okay, so now we come to this fantastic body. I mentioned Ramalinga Rajuna, immediately NFRA is coming. National Financial Reporting Authority. So this National Financial Reporting Authority is a sort of, when the, I'm giving all mythological examples only. When you know that, what is that? Shira of the Mandan. That, what is that? Not Shira of the Mandan. That Shira Sagar Mandan. Huh? What do you call that? Where the sea was, where the ocean of milk was, churned. And, all for the Amrit, all sorts of things came out, right? Uchastravas came out, Airavat came out, Lakshmiji herself came out, Dhanvantri came. Am I correct? All those came. Finally, of course, poison came. Then the Amrita Kalasa came. The point I'm trying to make is when the Satyam scam started, now that Manthan, you found that Samudra Manthan, you found that so many things came out. The NFRA came out, the Serious Fraud Investigation Office came out, everybody came out of that journey. And so Companies Act 2013 itself came out, finally, with all its provisions, tightening the screw on the auditor and all came out. All that is a product of that Satyam Manthan, where one company did such a big scam, and the auditors were clearly seen as in some way failed in their duties. I'm being very careful here. Some way have failed in that, some way, how, we don't know. Some way they have failed in performing their duties correctly. Immediately, the Ministry of Corporate Affairs became very alert, and they said, no, we should have somebody monitoring these guys. No, it's not enough if you just let them go off free. So they created what is known as NFRA. We saw this guy in accounting also. Remember, this is the body which can take up, what shall we say, it will also recommend the accounting standards, auditing standards, all that. So National Financial Reporting Authority. Before that, you had the National Accounting Standard Board. Now you have National Financial Reporting Authority. So NFRA will apply that, those rules will apply only to certain companies. Obviously, listed companies, whether listed in India or abroad, unlisted public companies with paid up capital more than or equal to 500 crore. So it touches 500 crore, you get into NFRA. Annual turnover 1,000 crores. Outstanding loans, debentures, and deposits greater than or equal to 500 crores. Okay. See, what you should do now, you should remember these limits. There are many of these limits now. Try to put them all in one Excel or in a notebook, columnar form. You have paid up capital, turnover, debt. Like that, and then you sort of write it and write NFRA rules applicable. That sheet now you keep it with you. And whenever you feel, you revise it. So before the exam, comparatively you'll remember for which one, which limit. So that is how you memorize and remember. Not by seeing them separately. So once you read this and then you go something else, you'll get confused. So do it, bring all of them in one sheet, right? This is what our CAR Bhupati used to do, past president CAR Bhupati, who taught us income tax. Now, for capital gains, he will take 54, 54, 54, everything in one chart, 54, and he will give column now. So that, and especially 54 and 54F, he will give column now. So that clearly we will understand which is what, which is when, we will never forget it. So, outstanding loans, debentures, and deposits greater than or equal to 500. Special companies like insurance and banking, which are governed by a special law. You remember, we already saw this. This is not new. When I taught accounts, there again I taught you this. Just we are going through it again. Companies referred by central government. CG means central government. In special interest, a body corporate incorporated outside India, which is a subsidiary or associate of any of the above companies, right? We already saw this. This is not new to you. Means we saw it in accounts. So now, in addition to informing the MCA, please understand, MCA control is there, but these companies to which NFRA rules are applicable, okay, every existing body corporate, other than a company governed by NFRA rules, shall inform the NFRA within 30 days of commencement of the NFRA rules, inform NFRA 1. Okay. So the minute the rules were formulated in 2018 and notified, now from within 30 days of that date, all companies which are applicable now have to inform who is the auditor as on the date of commencement of the NFRA rules. Right? You get the point now? The NFRA rules are announced. They are notified in the Gazette and with effect from such and such a date. From that date, within 30 days, they should file a form called NFRA 1, wherein it's nothing. It's just say, hey, this guy is our auditor, noted. And that's it. The spotlight will fall on that guy and NFRA will be closely monitoring him, whether he's doing any nonsense. That's all. Then every body corporate other than a company as defined in clause 20 of section 2 of that is section 22 is nothing but company incorporated outside India. Okay. Formed in India and governed under NFRA Act. So within 15 days of appointment of an auditor under subsection 1 of section 139. So after that, once the NFRA rules are there, other than foreign company, all other company formed in India and governed under NFRA rules, within 15 days of appointment of auditor, you should inform the NFRA, inform NFRA 1. So in addition to informing the MCA, file a notice of such appointment to the registrar. You remember, within 15 days, you have to file form number ADT1. All companies have to file ADT1. So what is ADT? It is abbreviation of audit, AUDIT. Na? So you remove the vowels, A, U you remove, I you remove, ADT 1. Okay. So similarly here you have to file NFRA 1. Along with that, you have to file, if you are an NFRA covered company, you have to file NFRA 1 also. Right? Chalo. Now, so this is about NFRA. We already saw NFRA in detail in accounts. The slide is there with you. Just have a look at it. See, I tell you, you may not be tested on NFRA. Maybe offhand they might test your knowledge whether within 15 days, if NFRA, so they might give you this concept and they might want to know whether NFRA rules apply to this guy, this company, and then they will ask you what is the procedure to be. You have to file NFRA 1 within 15 days. That's all. Beyond that, nothing happens now. If anything goes wrong, then NFRA will immediately pounce on this guy. Pounce on it. Which is good. Head notch. Take him to the somewhere and they'll do something to him. I don't know what. Which is the fear, now. So every auditor should remember NFRA is watching you. So we should be very, very careful and ensure that we maintain audit documentation, everything. I mean, believe me, no auditor is doing it out of fear. We are doing it because that is the way it has to be done as per our auditing practices and guidelines. Okay. We are not doing it out of fear. We are doing it because that is how it is. It is good for me. It's good for the auditee. It's good for the country. I do it. Okay. No need to be threatened to do it. Sagar Mandan, Samudra Mandan, Satyam Mandan. Correct. Satyam itself got Mandan at that time. See, if a body corporate other than a company defined in 22 is company body corporate. You remember? That is, means, okay, it's a good doubt. 2 subsection 20 is the definition of body corporate, where they said body corporate includes foreign company also, incorporated outside India. Now they are saying every body corporate other than a company as defined in, which means Indian company, a company formed in India to which NFRA rules will apply, should file within 15 days. Okay. So NFRA rules are not applicable outside India. No, you can't do that. So if the company is a foreign company, it has a foreign auditor, even though it may be a subsidiary, NFRA rules cannot apply to it. Okay. The holding company can be caught because that fellow is an Indian company. And in his consolidated statement, we can catch him. And we can ask the auditor why, what happened. For the local guy, we can ask. In case of unlisted company, all conditions, good point. This is a good point. If you remember my accounting PPT, this will have or. So everywhere you will find or. So this is or. Okay. Thank you, Mansi, for occasionally giving these comments and assuring me that things are good. In case of unlisted, so this is or. So the minute the word or is used, even if one condition is satisfied, it will go into NFRA. But if the word and is used, then both. Small company definition, go and have a look. It is and. So both conditions have to be satisfied. Only then it will be a small company. Even if one condition is not satisfied, it will be not small company. See, I'm quoting Mr. Bhupati a lot today because, see, these are all gyan that he gave us now. He used to say, Srikant, or he used to tell the students, see, boss, be careful. Whenever they want to make it tight, they will say, and they don't want to give you a benefit, they will say, satisfy both. But when they want to catch you, they will say, or. He used to say that. When they want to give you a benefit, some benefit, they will put and say both conditions are to be satisfied. But the minute they want to catch you, then they will put or. Even if one condition is satisfied, you are. These are all, see, I'm telling you, this is how our CR Bhupati used to take classes. It will be fun. And that too, he taught one of the most boring, I mean, for me, income tax. For me, income tax was, see, income tax is my bua. I have to earn my livelihood through income tax. But for me, I'm not very excited about income tax, but I'm passably good here. I can survive. I know enough income tax to survive for 35 years. But depth and all, if you go too deep and all, so sir, how about subsection 3C of subsection 2 of section 35? What? I have to go and refer and talk to you. Point I'm trying to make is such a complicated subject. See, R. Bhupati used to make it so interesting and so lively. Believe me. And he made a fool like me get 62 marks in income tax. Can you imagine? Even I was shocked. Even I thought I'll get only 50 plus, 55 like that. 62, not bad. So, okay, now we come to term of auditor. Do you remember? I said listed companies and other prescribed class or classes of companies. So, straight away, listed companies are covered. Then the prescribed class we will see. Except 1% companies and small companies shall not appoint or reappoint an individual as auditor for more than one term of 5 consecutive years. So, at a time, you can be auditor only for 5 years. Or if you are a firm of auditors, then you can be appointed for more than 2 terms. That is, you can be appointed for 2 terms. So, beyond 2 terms of 5 years, you cannot. So, normally, auditor is appointed for 5 years at a time. Other than listed company and prescribed company, he can be reappointed indefinitely. Any number of times. I'm not joking. There are clients where we are their auditors for 50 years, 40 years. So, I mean, it goes beyond me, to my father also. So, by the time it's 60 years, some of us, we are completing 50. Firm is completing 50. So, it started in 73. So, 50. So, we have clients who are even before that, who are formed before that and continue to be our clients? No. So we are reappointed. But if they come in this prescribed class, then only for 2 terms, meaning first 5 years, there is now to 5 years from now, then from that year to another 5 years, 10 years. That's all. Thereafter, there will be a cooling period. Only then you can. There's a cooling. Okay. So this is called rotation of auditors. This concept is called rotation. So here the word firm includes LLP also, limited liability partnership. So though they use the word, actually the word firm is wide enough to include LLP also. That is limited liability partnership, right? LLP. So this is rotation of auditors. So who are the prescribed class of companies? This is what I said. So you make a list of, columnar list with audit committee, then appointment of audit committee, and NFRA, then rotation of auditors, compulsory rotation of auditors. So suddenly you'll find you're able to do a comparative study. And preferably you don't use Excel. Use a long quire sheet. You take the double sheet, rule sheet, draw lines, or if you have a long notebook, make lines. And with heart mein likh dijiye. You write with your hand. Believe me, if you write with your hand, you'll remember better. It's a psychological thing. Okay. When you read, little bit will go. When you write, you'll remember better. This is something you have to believe and try. Outstanding loan is 50 or 500 crore as loan and paid up capital same as 500 crore. I'll check up and get back to you, sir, because these numbers are taken from the act. So to my knowledge, unless if you see something different in the Board of Studies material, you tell me, because that will be correct. The Board of Studies material will be correct. By the 100%, the Board of Studies material would be correct. So in case you're looking at some other number there, kindly tell me this could be a typo, I will correct it. Straight away I'll correct it. So as of now, what is here is correct. But if you have some other number with you, then check it out. So all unlisted public companies having paid up share capital of rupees 10 crores are above. Unlisted public companies 10 crore. Paid up share capital of 10 crore. See, the beauty is many public companies would be there, but rarely they will go paid up share capital 10 crores on. Or all private limited companies having paid up share capital of rupees 50 crore or more. 50 crore paid up share capital. Okay. All companies having paid up share capital of below threshold limit mentioned in A and B above, but having public borrowings from financial institutions, banks, or public deposits of rupees 50 crores. See, basically, they are looking at three types of companies. One is public company, unlisted. Listed means straight away gone. Listed, straight away rotation. Unlisted guys, so you ask, what is the paid up share capital of this guy? 10 crore or more. Compulsory rotation. No. He is not a public company. He is a private company. Okay. Private company, we are not going to let you go free. No exemption for that guy. Call him. Are you having paid up share capital? 50 crore. Okay. For you, 50. Oh, we are having 50. Then compulsory rotation. Go. Then, finally, this fellow is a public or private, but he is below the limit. Means, fellow is a public company, but below 10 crore. Fellow is a private company, below 50 crore. What to do with him, sir? Sir, check out his loan, yeah. Is he having public borrowings from financial institutions, banks, public deposits of 50 crore or more? Yeah. Catch him. Rotation. Straight away rotation. I hope you understand how they are doing. This is a filtration process. I hope you got the point, Mr. Srinivasan. This is how there. So 50 is correct. Unless you know there is something you are having something contradicting this statement in the Board of Studies material, kindly inform me immediately. I will correct it immediately. Otherwise, the logic is first if it's a public, check for 10 crore. It is below 10 crore. Then check for public borrowings from financial institutions, banks, or public deposits. If that is more than 50 crore, rotation will allow. If it's a private fellow, check for 50 crore. But if that is not there, then check whether the public borrowings are more than 50 crore. Then rotation will allow. This is how you have to compare. 1% companies and small companies are excluded, even though they might cross these limits. You understand? Even though, for example, a 1% company will not be a public company, ma. Okay? A small company will not be a public company. Hello, small company definition. Please remember, public company, it's a private company. Okay? See, this is how you will get caught. Yeah. In the exam, you will go, the minute you say limited, be careful. Only if it's private limited, then you even talk about small company. So such a small company will be a private company now. They might have paid up capital more than 50 crore. But still small company now. So not like that. Okay. One more thing, small company limits have been increased. Do you remember? Whereas this limit was done at the old limit, when it was old, right? So that is why it's like, but it's okay. Because for small company, both the conditions are to be satisfied. Am I correct? Both have to be less than, whereas here, one is enough. So it's quite possible that it may be a small company, but the rotation of auditor will not be applicable, even though the threshold here may be changed. In NFRA slide, I'll check up and tell you, sir. And maybe you are right, sir. Maybe you are right. No. I have to clarify two things. One, for Srinivasan, I have to clarify whether this is 500 crore And then we had one more gentleman wanted, Mr. Mitesh Kumar Boy wanted example 2 from him. Both will be taken in the next class. Done. Because this is sitting in front of the system now, it will be very difficult for me to refer. Usually I keep the material with me, but today, I'm in a different location in Chennai, but not in my office. I'm at home. That is why I'm unable to immediately answer questions. Okay. How you studied in your days, Harish Babu? Systematically and smart, not bugging or reading everything. And how you studied? I don't know. I used to study. I don't know how to. It's a very big question. Time is not there for even answering 1/4 of what you're asking. How you study? So there are fantastic YouTube videos and content on various things ever. See, I'm after all India 30th rank holder. There are all India gold medalists who are given how they studied and all. Don't you think that will be very useful to you? Just listen to what, but don't do what they did. You have your own style. Everybody has their own style. By adopting another person's style, we cannot win. We should be our own style. Okay? Broad principles are there that we can follow, but everything, if you do what they do, also still you are not they, you are you. So for you, you have to do what you have to do. In fact, the other day I was with somebody and my co-brother was there. He said, Srikanth is a gold medalist. I said, I'm not a gold medalist here. I'm an All India 38th rank, final All India 27th rank inter. Sir, I'm not a gold medalist. Then that gentleman said, you know what? My sister is a 12th rank holder. Definitely, sir. She is far superior to me. Totally, I agree. 12th rank is definitely superior to 38th rank. No doubt about it. Now, an individual, okay. So the point is, auditor can be appointed for individual means only 1 term of 5. Audit firm, 2 terms of 5. So there is one thing here which you have to be very, very careful. An individual, I'll tell that. And from the exam point of view, it's very, very important. An individual auditor who has completed his term, that is 1 term of 5 consecutive years, shall not be eligible for reappointment as auditor in the same company. Note it, ladies and gentlemen, in the same company for 5 years from the completion of his term. So 5 years over, then 5 years cooling, sit full, chill, be calm. So that gentleman, who bought 1,20,000 shares should be very happy now, because her husband will not go for that audit. That audit is gone, okay, so she can be very happy. No? An audit firm which has completed its term of 2 terms of 5 cannot be appointed for 5 years. So the cooling off period is 5 years. Okay, see, like, when the car is running continuously, the engine will get heated. That was in those days. Okay, today engine will run, it can go on easily 600 kilometers. But after that, any engine will get hot. So you have to cool off a little. Okay. What is the term of auditor for listed company? Boss, listed company, 5 years and 2 terms of 5. If it's an audit firm, 2 into 5, 10 years. If it is an individual, 5 years. At that time, then he has to go for cooling, 5 years. Then at the end of the 5th year cooling period over, again you appointment, another 5 years. If it's a firm, another 10 years, like that. So for listed company and for these companies, all these class of companies, this is the variant. So the term of auditor is 5 years at a time. If it is a listed company, if it is a firm, you can appoint for another 5 years. If it is an individual, that's all. Okay, for the next 5 years, he can be auditor for that listed company, right? Then some other auditor will have to be selected. Then at the end of 5 years, you can again go back to this guy. So usually most large listed companies, they have a fantastic choice. Now, 4 big 4 plus 1 grant. So think about it. Even if they take 5 years, 25 years, they've got a rotation. No problem. 5 of them can take it up. Then again, you can bring the first guy back. So no problem at all. Okay. You can keep on doing it. No issues. So one of them will get it. So many distractions these days, sir. Not at such those days, sir. I'm sorry, I'm laughing. Sir, distractions are always there, ma. See, in Mahabharata time, distraction was there. When Arjun was standing in the middle of the battlefield, throughout distraction only. Okay, I'm talking about Mahabharata. Distraction is always there. Okay, so what you should do, you should be calm. The distraction will come. So, you believe me, let us say that you're sitting in your room studying, yeah. Where is the distraction? What you are doing? You are not studying. Your mind is wandering. That mind was wandering 100 years ago, 50 years ago, 25 years ago. Wandering mind is not new to 2023 AD. Wandering mind is as old as man. So the distraction is not outside, the distraction is inside. So control the mind, everything is controlled. You understand what I'm saying now? Don't mistake me for telling this, my dear Balamurali Krishna. There is no, distraction. Whatever. See, when I studied, there was distraction, Baba. Don't think there was no distraction. Okay? Every time there's distraction. Distraction is there always. What is there? See, think about it. You're studying in your room, sincerely studying company income tax, okay, or accountancy. Suddenly in the bathroom, that water tap, is leaking. So, tuck, tuck, tuck. That sound is there, na? Distraction, Baba. So, no, nothing can distract you if you don't allow it to distract. Okay. So the secret here is not distraction, but controlling the mind. Okay, since you are taken up this topic, allow me, just give me 2 more minutes to waste your time to quote from the Bhagavad Gita itself. I'm not joking. The entire 6th chapter of the Bhagavad Gita is Dhyan Yoga. Just if you get a chance, I know you're all studying CA also, listen to one YouTube at least. Swami Chinmayananda lecture is that he talks about Dhyan Yoga. Just quickly listen, you'll get so much. Or any Swamis, whoever, there are so many lectures, just so many distractions are there now. Let Swami Chinmayananda be one distraction for you, yeah. I'm allowing that distraction. Just go to the YouTube and listen to Dhyan Yoga, wherein Swamiji, there, Arjun will get all these inputs. What all Krishna is telling us, don't allow the mind to wander, concentrate. No. But even then, Arjun is not happy. Arjun will tell, no, Krishna, I don't agree with you. Chanchalam hi mana Krishna, Ramadi, Bhalavad, Dridam. See, this mind is totally confusing. It is all the distractions, it is going everywhere. What to do? Kya karta? So, Krishna looks at him and smiles and says, Chanchalam hi mana Krishna, Jana, Brahmati, Bhalavad, Dridam, Tasyaham, Nigraham, Manye, Padivari Vasudustaram. This is difficult to control the mind as controlling the wind. Wow, what a speech. So immediately Krishna looks at this guy and smiles and he says, Asamshayam Mahabaho. Absolutely correct. O mighty armed one. Asamshayam Mahabaho. Mano Durnigraham Chalam. He agrees with that fellow. He says, yes. You are having so many distractions now. Too much distractions. But then he says, Abhyasena tu kaunteya vairagyena chagrigede. If you have abhyasa, practice, and vairagya, concentration. I want to become CA. My goal in the next 2 years to become CA. Thereafter, my life will become better. I will be able to earn more. My freedom will come. I will attain freedom from financial bondage. If that is there, then with that abhyasa and vairagya, automatically distractions will disappear. I'm so sorry to give all this unnecessary gyan, but this is how I study. By completely concentrating on the goal of becoming a CA, which is more important than cricket match, cinema, first day, first show. There is nothing. There will be another 100 first day, first shows. But only one opportunity for you. Okay, think like that, no distraction ever. In any age and any time. No problem. Okay, no issues. Sorry for thing. Mitesh Kumar, go somewhere else. Use a earphone. Use a earphone. That is what I do. No problem. So not for me to waste your time with all these things, but the idea is to give you some inputs which would help you to see next time when you are feeling distracted. Remember, abhyasena tu kaunteya vairagyena chagrigede. These 2 things are the watchwords. Okay. Now we come to the very, very important thing. So, Mr. Boy, whatever may be the sound, you concentrate on what I am saying. Audit firm having a common partner or partners to the other audit firm whose tenure has expired in a company immediately preceding the financial year shall not be appointed as auditor of the same company for a period of 5 years. Okay? What does it mean? AB and Co firm, AB and Co is the auditor. 5 plus 5, 10 years over. Now AB and Co has to go. Now what happens? From AB and Co, Mr. A becomes a partner of AD and Co, another firm. Now that AD and Co has a common partner, na? AB, here A is here, there also A is there. Then such a firm having common partner cannot be appointed as auditor of the company for a period of 5 years for the same company. So AB and Co, A is the partner. What he does, he is in AB, he comes to AD. AD also he is a partner. Now the company is saying, hey, we are not appointing AB, no problem, but we are appointing AD. Why? Because A is there. So they want A, not the firm. They want A, whatever it is. Since AB and AD have a common partner, AD and Co also cannot be appointed for 5 years. The disqualification or that rotation rule will apply to AD and Co also. Why? Because it has a common partner or partners to the other audit firm whose tenure has expired. So the minute you are appointing another firm, ask, are there any common partners between this firm and your existing auditing firm which is going to tenure is getting expired? Yes. Then the new firm also cannot be considered. You go for another firm where there are no common partners. So here is a classic example. Ram, Rahim and Robert and Co is a firm of chartered accountants with 3 partners, Ram, Rahim and Robert. And Robert is a common partner in Robert Associates, an LLP. Ram, Rahim, Robert and Co was appointed as auditors in the company Rainbow Detergents for 2 consecutive periods of 5 years. So this will answer it very clearly. Now, Marin Khan, tell 2 terms of 5 years means 10 years. Yes. 2 consecutive period of 5 means from 2016 to 2026. Okay, so 26 is in the future. Don't ask me how I am going into the future. It's okay. So now the company wants to appoint Robert Associates as his auditor. Can they do so? Ram, Rahim and Robert and Co. Ram, Rahim, Robert and Co. Then you have Robert Associates. So Robert is there in Ram, Rahim, Robert and Co. and also in Robert Associates, which is an LLP. Note it, not AIL. But if I had written limited liability partnership, it will be your limited liability. So the point is, can they do so? Obviously not, because Robert is common. Therefore, no. Okay. Okay, which emoji? I don't know. Thank you. Thank you so much. No problem. 2 terms means 5 into 2, 10. For firm. For individual, only 1 term of 5 years. Okay. Now, this is a very interesting question, and I want you to answer it. Unless I get from answers, I will not. Nagaraju says the limit of 500 crore turnover, 1,500 outstanding. 9.24. Thank you, sir. Thank you, Nagaraju, for confirming that the slide is correct. Mr. Srinivasan noted. So one question answered by Nagaraju. Now the other one, it's my duty for Mr. Boy. I will do that. Chalo, now you read this. Lemon and Company. Robert is common. Thank you, Priyaji, for that. Lemon and Company Chartered Accountants is a limited liability partnership firm with CAM and N as partners. It is the statutory auditor of a listed company, Messrs. Big Limited, for past 6 years. So, 6th year now, which means what? They have to go. Okay, 5 years over now, so they have to do it. CAM is also a partner in another chartered accountant firm, Dew and Company. Lemon and Company, CAM and N are there. CAM, there is CA, Mr. Yam, is also a partner in another chartered accounting firm, Dew and Company. Chartered. Now, advice? No. Up to how many years can Lemon and Company continue as statutory auditors of Big Limited? what shall be the cooling off period for Lemon and Company with respect to Messrs. Big Limited? Okay. Can Dew and Company be appointed as statutory auditors of Big and its another listed subsidiary Dark during such cooling off period? Lastly, can Lemon and Company be appointed as audit? Lemon is actually basically LMN. LMN. That is MN, LMN. Lemon. Can Lemon and Company be appointed as auditors of, as internal auditors of Big Limited and its another listed subsidiary Dark Limited? So, basically, Big Limited has been statutory auditor for 5 years. So what would have happened is at the end of the 5th year, they would have been reappointed. So they can actually continue for 4 more years. Right? Now, because they M&N have already been, Lemon has already been there now for 6, but they can be appointed for another 5 years now. So 6th year now, so another 5 years. So 6, 7, 8, 9, 10. Technically, they can be appointed till the 10th year. So they can be. If at the end of the 10th year, they can be appointed for 5 years. Now, during that cooling off period, can Dew and Company be appointed? No. Why? Because they have a common partner, Mr. M. M is a common partner, so they cannot. Please note, Dew and Company cannot be appointed as statutory auditor of Big Limited. Now note it, very important. You might have had a doubt, I'm clarifying it. Can Dew and Company be appointed as statutory auditor of the subsidiary of Big, that is Dark Limited? They can. Nothing wrong. Even though the cooling period is there, you can be appointed in the subsidiary. The subsidiary it is not the same. They have not, or rather, there is no condition that it cannot be appointed in the subsidiary. That's why I stressed the point. Now you remember, same company. So you can appoint in the subsidiary. I even said, note it, ladies and gentlemen. So he can be appointed. Similarly, this section or this condition of rotation applies only to statutory auditors. So it does not say that if the cooling period, they cannot be appointed in any other capacity. So since they are not the statutory auditor, definitely you can appoint them as internal auditor. You can appoint Lemon and Company itself as internal auditor of Big and another listed subsidiary Dark during the cooling off period. Okay. So in fact, this has happened in many cases for many of us, where we are so close to the company, they want us to continue in some role or the other. So the MD and the board, they will call us and say, hey, you know how it is, the pressure is there, Baba, we are putting somebody else, but you are there, continue, you be what do you want to be? Internal auditor, go check, take it. Whatever, send a bill, whatever bill you are sending, you send. Do the work and keep me. Every month I want you to come and give me a report later. Chalo, definitely. So it can happen, nothing wrong. So Nagaraju says 1, 2 terms, correct. So the second term will end 4 years later, because 6th year, 1/4/21, so 4 years later it will end. 3, they cannot be appointed. Be careful. Dew cannot be appointed as auditor of Big Limited, but it can be appointed as auditor of Dark Limited. So be careful. 3 is a double-edged sword, or rather a double-twisted question, where it is one answer is no, the other answer is yes. Big Limited, no. Dark Limited, yes. We see many of you for 3, you are straight away saying common partner. Common partner rule will apply only for Big Limited. For Dark Limited, even Lemon can be appointed. Definitely Dew can be appointed. Nothing wrong. 5-year cooling off, not for subsidiary, Madam Neha Yariji. No. Cooling off for subsidiary. But this guy was not auditor of subsidiary. Na? For him, first appointment. Na? Yeah. Then 5 years later, and that subsidiary should be either a listed company or one of this category. You understand? That subsidiary should be either a listed company or if it is unlisted or private, then one of these categories. Then only rotation will apply to that subsidiary. So just because rotation is there for the holding, automatically it won't come for the subsidiary, right? So I feel this is important from the exam point of view because they keep asking you on this. They keep testing your awareness on this. So I hope you all got the point about 3 and 4. Okay. 4, let us see what Nagaraju says. Might be appointed as internal. No. What does Nagaraju say? Nagaraju, where are you? One sec. 4, no. We can be internal auditor, no problem. So let us see what Rita Banerjee says. 4 years as it is a firm. 5 years. No, they have common partners. See, 3, all of you are treating it as a single question. My humble suggestion, treat it as 2 questions. Big limited alage, dark limited alage. Separate. Okay. Then 4 might be appointed as internal auditor during cooling, but cannot be statutory. Correct. That is correct. Okay. Got it? And definitely can be appointed in subsidiary as even statutory. What confusion? What confusion, Mr. Herge? What confusion? Same firm cannot be appointed for, firm can be appointed for 5 years at a time. 2 terms, 10 years. So this firm can be appointed for another 4, can go for another 4 years. Because 6 years is also another 4 years. At the end of 4 years, they have to cool for 5 years. During the cooling period, there is another firm where there is a common partner. Can that firm be appointed as statutory auditor of Big Limited? No. Can it be appointed as statutory auditor of Dark Limited, the subsidiary? Yes. Can the Lemon Company be appointed as internal auditor of Big Limited? Yes. Can it be appointed as internal auditor of a listed subsidiary, Dark Limited? Yes. But since that listed subsidiary, not Dark, so if Dewan Company is appointed as statutory auditor of Dark, that they can be there only for 5 plus 5, 10 years. Because Dark is a listed subsidiary. Okay. But even then, they can go on for 5 plus 5, 10 years. Okay. Why is rotation important? It is important because it is important. Because according to the Ministry of Corporate Affairs, the main problem is that the auditor becomes too familiar with the client. And they become sort of one in one, and the auditor does all sorts of fraud. So the only way to keep these fellows honest is to rotate them. To keep on rotating them, they will be very good boys. So again, remember, the 4 fellows are going to be reappointed again and again. None of them is for the big guys. It's only these 4 plus maybe 1. So you will end up with this one of these guys only. Clone only will come. Okay, so they will have the. So between them, who is going to be the weakest link? We have to see. That is all. For Satyam, it was Pricewaterhouse. Okay, for Satyam, it was Pricewaterhouse. So let's not give a big crown of glory to the rest. Anywhere, anytime, anyone can slip. Any partner can slip, and you are in trouble. So more than rotation, the firm should have internal controls of peer review, and there should be constant peer review within the firm to ensure that there is no, which happens even in small firms like mine. Even in small firms like mine, we have another partner who reviews my work, who does an ethical study and says whether Srikanth has exercised this. And I also do, because I'm the senior partner. I do for my junior partners. Just go and check. What are you doing? What are the documentation? How did you form this opinion? Are you happy? Are you satisfied? Like that. So this constant check should happen. And that is more important. But the law feels, and maybe rightly so, because I have stopped questioning these things. Whatever they say, do it and away. Because if you keep arguing, it's a waste of time. Don't argue with authority is my ultimate learning. Because they have danda. So they have the right to punish you. So better not play with them. Do what they say and be happy. But ethically go beyond the rules. The code of conduct and the MCA ka rules and the NFRA ka rules are only so much in hand. For the honorable and virtuous man, there are rules that are bigger than this. And go there and stay there. These rules are nothing for you. See, that's what I'm saying. If you go on asking me like that, what can I answer, Khan? You tell me, Ji. The auditors can go in case of subsidiary. What can I do? I tell you what, Mayor Khan, you should do. No, this is a loophole in the law. After you finish this class, no, you'll have a cup of tea and have your dinner. Then go to the website of NFRA. or better still go to MCA website and go send a mail. I'm not joking. Seriously. This is an unnecessary loophole. Or better still, you in taxguru.com, you write an article, student article. I feel that this rule is wrong, like that. It's your opinion, and you are right. See, that's what I'm saying. If 10 years is there, if your firm is going to do fraud, easily within the 10 years they can do for this company itself. Okay, so absolutely correct. Absolutely correct. What you're saying is correct. So 10 years is there. Within 10 years, anything can be done. And by the time, everything can be done. 10 years is sometimes the life of a listed company. Because the company is formed, goes public, does all nonsense. And then 10 years, the company itself is not there. Go and check up so many companies which came in the listing 10 years ago are not there today. Many of these fellows who come now will not be there 10 years later. So it really this is how it is. Huh? So, chalo. But from the exam point of view, please remember, he can be appointed in subsidiary. Same auditor can be appointed as internal auditor during the pooling. This is, yeah, you have to have it. Your opinion on that, I'm happy about it. Okay. Sorry for not attending live classes. Okay. You attend, now you are attending live only. I am alive, you are alive. What more do you want? Being alive is enough now. What more God should give us? No? What more God should give us? He gave us life. He gave us intellect. He gave us the ability to do this. Nothing else you need from God. Only the life. Everything else you can do with His help. Chalo, A, B, C and Co is an audit firm having partners A, B and C. What surprise. Chartered accountant Mr. A, Mr. B and Mr. C are holding appointment as auditor in 4, 6 and 10. So A has 4, B has 6, C has 10. Provide the maximum number of auditors remaining in the name of A, B, C and Co. And provide the maximum number of audits remaining in the name of A, B and C, alag, separately. Can you give me the numbers? Which also will give me a small time to take a short break for 5 minutes. Short break for 5 minutes. Okay? Short break. So let us see if you got any. I'm sure all of you have got answers. Beautiful. Yeah, 60. The overall limit for this firm is easily calculated. 3 partners into 20 each, 60. So Anmol Patwa gives the right answer. And as far as their sublimits are concerned, A has 16, B has 14, and for C, it is 10. Correct. So Anmol is right. But see, for the individual partners, it's different. 60 for the firm as well. So it means like totally the firm can have 60, but A can have only 20. So another 14 only he can have. B can have only another 60. I'm sorry, another 16 only A can have. 14 B can have, and only 10 C can have. Good. Fantastic. Okay. Correct. Now, what happened was this whole concept of rotation of auditors came in along with the Companies Act. So when the Companies Act was passed in Parliament, this became a talk of the town. And obviously, companies themselves were not happy because suddenly one fine morning, if you go and tell the auditor, now go, they also cannot go. So already auditors are working. So, and many auditors have been there for more than 10 years. Many firms have been there more than 10 years. And many individuals have been there more than 5 years. So suddenly you go and tell him, go, he can't go. So they gave a sort of breathing period. I will call it not cooling period, but breathing period. And they said, you have to comply with these provisions that company to which this section will be applicable shall comply with those provisions within a period which shall not be later than the date of the first AGM held within the period specified. Meaning, individual means 5, firm means 10. So, if, for example, this became valid in 17 auditor needed to be reappointed. So, what happened? This was notified in 2017. So, they gave another 3 years. So, for another 3 years, the same auditor will continue. Right? So that if a firm has already completed 10, they will still get 3. Got it? If a firm has completed 7 years, then they will get 3. Am I correct? 7 plus another 3. Normally for him, 3. Firm will get another 3 plus 3. So 6 more years. Like that you calculate. If the firm has completed only 3 years, then there is another 7 plus 3. 10 years he can be. If the firm was only appointed last year, then 10 years he'll continue. Then after that, 13 years he'll go on. You got it? His normal period plus 3. So that is why this is called the transitional period. There's a table there in the Board of Studies material giving the way I have told now. So if they are having 3 more years plus 10, 10 more years, then plus 3. If you add 3, so they get a breathing period of another 3 years. So which meant most firms continued for quite a long time. 13 years and all we continued. And then we needed to get reappointed. I'm sorry, if they have not completed 10 years, if they have completed 10 years, then 3. So most cases, in our cases now, what happened? We would have completed 20 years, 25 years and all. So 3 years was there. Then after, so about 4 clients come in this category. And only 2 listed companies and 3 more companies which are in this category at that time. So 3 years we had breathing time. So by then we have to be mentally and emotionally prepared, possibly try to get other clients. I don't know what to do. Anyway. Rito is asking a general question. Firm taking the audit, does that mean any one of the partners are appointed or see, if it is a firm of chartered accountants, it is the firm which is appointed. To answer your question straight, the individual partners will not be appointed. No identified partner will be appointed. The firm only will be appointed. Then internally, the firm will decide some manner. How the policy is taken, we do not know. the firm will decide how the audits will be conducted. Which partner will be allotted which audit. They will decide amongst them. That's under understanding between them. So the partners meeting, they will decide, I will do. That's a different story. How they decide is there. So once they identify the partner, that partner will take up the audit of that company. He will sign the balance sheet on behalf of the firm, not in his own name, on behalf of the firm, as partner. In my case also, my firm is Kapagam Krishnan and Natarajan. I sign on behalf of. So I have certain audits, others audit. So like that we keep. There is an understanding between us. So that is how it is. Individual is appointed in his own name or her own name. Members of a company may resolve, may. I hope you understood this may. May resolve. May means what? May is always option. May is optional. The minute we say may, it is optional. It is not compulsory. Not compulsory, optional. So if they want, the members may resolve that in the audit firm appointed by them, the auditing partner and the team shall be rotated. So as I told you, that the members can decide. They can say the same partner should not do for more than 3 years. So the firm will be there for say 10 years or 5 years. So they may say the same partner cannot continue for the 4th year. 3 years, one partner, then again one partner, like that. This again is an audit committee decision. The idea again is some sort of a peer review. So that when one partner has done it, when a new partner comes now, he will take up in a different way, hopefully. Okay. So the audit shall be conducted by more than one auditor. They can say, why only one auditor? Why not have joint audit? So joint audit is something that I have always felt, because see, some large listed companies now, it is better they have 2 auditors, maybe one big and one medium. Why? Because the big guy may do something, now the medium will catch him. If the medium does something, now the big will catch him. So both will be, it will be like they both will be having knife on their neck, and that will ensure that any such possibility will become even more difficult, because only one firm you need to know correct. 2 firms have to be done, and that too, one guy may not want to do it. In which case, it's too transparent for people to do any nonsense. Whereas if there's only one guy, big, small, medium, whatever, it's quite easy to, he also gets into the comfort zone and says, okay, you get an opinion, I will see what can be done. So, not possible. The other guy will be like a dog, come fight team. Say, no, I cannot agree with that. The risk is too much. Like that. So, they might qualify finally, and the qualification will be good. So, I think joint is a good idea, that you can have more than one auditor. There are many companies where they have more than one auditor. It is called joint audit. There's a separate audit practice, SAP itself for that. How, when there's a joint auditor, how the responsibility will be there. But collective responsibility, if something goes wrong, both are equally better. And when there's a joint audit, automatically there'll be a peer review of audit, working papers. So that's why I said, later on when you go to auditing, try to bring this law knowledge into that. So it will become easier for you to understand. Okay, central government can also prescribe the manner in which companies shall rotate their auditors. They have not done anything. So as of today, rotate means just rotate him and send him out and appoint a new firm. That's all. Whatever it is, the audit committee shall recommend the incoming auditor to the board. If no audit committee is there, then the board shall recommend to the members. We already saw this, right? This is for rotation. Now here we come to one more condition. That is, in case of an auditor, the period for which the individual or firm has held office as auditor prior to the commencement of the act shall be taken into account for calculating the period of 5 consecutive years or 10 consecutive years. That is why they gave the 3 years gap. So, for example, if a firm already completed 10, they have to be appointed to the next AGM. This law comes. Suddenly, where will I go for a new auditor? So the law said for 3 years you can have this guy. Even though they've completed 10 already, okay, prior to the commencement of the audit, act also you can take. So if you count, it's already 10 over. Maybe they are in the 25th year, whatever. So definitely he cannot be appointed this year by this method. But still they said for 3 years you can appoint. Okay, like that. So like that, suppose prior to the commencement of the Act, this fellow has been an auditor for 6 years, the firm has been for 6 years, they can be there for another 4, right? Plus 3. At least 7 years they can be. It's a simple calculation and very important calculation for us because we know our life in that company. How many more years we can continue like that. For the auditee also, it's very important because most auditees would prefer the existing auditor by definition. So when they have to compulsorily rotate only, they will rotate. So definitely there's a comfort zone. So once you have a new auditor, the comfort zone will be there. 43 simple language. I explained many times. One more time I will explain. Simple language. If the firm has been auditor, you combine it with this. So this rule came into effect in 2017. So before that also, that man would have been an auditor, that firm would have been an auditor. So if you count that, it may be more than 10. So what happens? The minute the law is announced, he cannot be appointed in that AGM. Correct. So everybody went and pleaded. They said, don't do this. We can't appoint just like that another auditor. We need time. So they gave breathing time of 3 years. So there is a firm of CA which has been there for more than 10 years. So at the commencement of this rule or this act, they would have more than 10 years. So they cannot be, but still they can continue for another 3 years. So such companies which are covered by this provision shall comply with those provisions within a period which shall not be later than the first AGM held after 3 years from the date of commencement. So once the law has come into force, you have one AGM, appoint him. Next AGM, appoint him. Third year, you will have one AGM. In that AGM, you have to appoint somebody else. Got it? This is the simplest way I can tell you. Right? Check it out. If you have not still understood it, in the Board of Studies material, the MCA calculation frame, this thing is there. Just go through it in the light of my lecture. You will be able to easily understand the mathematics. Okay. So the idea is you got 3 years breathing time. That's all. From the commencement of the act, all auditors got 3 years. So immediately you need not appoint. But suppose there's a guy who's completed already 7 years only, he still has 3 years. So that 3, which is naturally available to him, plus another 3. That's what it means. Okay. So because if he only completed 7 prior to the commencement of this act, then he can still continue for another 3. Then what do they say? Within a period which shall not be later than the date of AGM held within the period specified under subsection 1 of section 96. So after 3 years from the date of commencement of this act. So you get, anyway, he gets his 7 plus 3. Okay, this is such. Okay. So immediately on commencement of this act, all auditors need not be rotated. Okay. Now, the incoming audit or audit firm shall not be eligible if such auditor or audit firm is associated with the outgoing audit or audit firm under the same network. See, there's something called network concept where 5 or 6 alag firms not having common partners. No common partner, but they would come in the same network. Meaning, see, there are 5 firms of CAs. They are operating in different cities, but they have sharing of work, sharing of employees, sharing of audits, whatever. They are called a network. So suppose in that network, there is a firm A. He gets out through rotation. Now, in that network, another audit firm cannot be appointed. Suppose in that network, there are 3 more firms. One in Bengaluru, one in Hyderabad, one in Chennai, and one in Mumbai. Then Mumbai has to rotate and go. Then Chennai cannot be appointed because Chennai is in the same network. Network means connected. They have an agreement amongst themselves, which they will inform to the institute that we are a network of audit firms, which means they will have a common name, like say so-and-so firm network. The idea is to have some more expertise in all. Yes. So there won't be any common partners. Okay. Partner of audit firm and auditor moves to other firm, whether new audit firm. Yeah, you got. We even did problem now. Is it compulsory for the board to consider audit committee recommend auditor? Good question. Good question. Actually, no. Actually, no. But normally they will, but actually, no. Because remember, the audit committee is only a committee consisting of directors. Now, what they recommend is only recommended. So when it comes to the board may have a different view, in which case it will be a big issue. Because the press, suppose it's a listed company, the audit firm has recommended A and Co, A, B and Co. The board of directors says no A, B and Co. We want only BC and Co. It will be beautiful news for all the business dailies. Headline news. So-and-so company, listed company, rejects audit committee recommendation and appoints so-and-so firm. Like that. Thereafter, that firm will be under close monitoring by NFRA, because why they refuse the audit committee, and then the audit committee chairman also will be called, why, and the MD will be called, why are you, they have to give a valid reason why they are rejecting the audit committee. So generally they won't play this game here. They will not, I have not heard of any situation where the audit committee can say, audit committee recommendation is only documentation. It's the board which will select, but because it has to come from the audit committee will meet and go through the process of recommending this guy. And then the board will take it up and that is how I have seen it. But boss, life is life. There could be a situation where the board can take it. Okay. Yeah, the network of firms could have a common trade name. Why not? You can. See, it could happen because, in many cases, audit firms have something called legacy. So that legacy they may not want to let go. So the name they may not want to change. When there's a merger, there will be a change of name. So that they may not be happy about that, sacrifice of their name for becoming merged with some other firm. So they might say, we won't come and merge with you, but let's all be network and we'll share. See, the same advantage we have as merged firm, we will try to get it without merging like that. It's a question of synergy. Okay. For the purpose of rotation of auditors, a break in the term of continuous period of 5 years shall be considered as fulfilling the requirement of rotation. I don't know really what this means. That is, they are saying you appoint for 5 years, then he's there for 2 years, then not there for 3 years, then again you can appoint. I don't know. Is that what it means? I'm not aware of this. I don't understand this. Because break in the term for a continuous period of 5 years shall be considered as fulfilling. So long as that period should be 5 between, the gap between one appointment and another appointment should be a continuous period of 5 years. Okay, that's what they are trying to say. But 5 years he cannot be auditor again. If only after 5 years he can come again. Or reform means after 5 years only they can come. Now, if a partner who is in charge of an audit firm and also certifies the financial statement of the company retires from the said firm and joins another firm, such other firm shall also be ineligible to be appointed for a period of 5 years. So this is going beyond common partner. See, let's take the old example of AB and Co. Now, AB and Co, A is a partner. For 5 years, AB and Co was the auditor. Another 5 years, 10 years. 10th year, the financial statement of the company was signed by A. He certified the financial statements. Then, at the end of the 10th year, before the new auditor should be appointed, this guy signs the balance sheet and retires. And then A retires. And so A, B and Co ceases to be A, B and Co after A goes. And whatever it changes, its name does not matter. But whatever it is, A is not a partner here. He joins A, D and Co. Now, can you appoint A, D? Strictly speaking, there is no common partner because A is not there in AB, he is there in AD. But still, AD cannot be appointed. Why? Because A, the partner who is in charge of the audit firm and also certifies the financial statement, had retired from that firm, AB, and has joined the other firm, AD. So that such other firm cannot also be appointed, ineligible for 5 years. This is different from common partners. Common partner stayed away. Even though he may not have retired here, he might not even have certified the financial statement. Still, if there are common partners, other firm cannot be. Here, this guy resigns, retires, and goes there. That firm also cannot be applied. So idea is they are trying to fill all the loopholes and gimmicks by which, we try to do all this. Because if this provision is not there, straight away we will retire and go now. Because if there is one company that's giving a huge fee, let us say 40% of the firm's income is coming from that one audit. You mean to say this partner will be keeping quiet? He will say, boss, I'm going out. And then he will go out and he will take it up. And the company also will oblige, because you see, the link between the signing partner and the company is too deep. It's an emotional link. The MD will be very close. In fact, going beyond statutory audit and certification, that partner would have become an advisor to them. Definitely because of his knowledge, experience, awareness about the company, the family, he would be very close to them. And this cannot be, the statute cannot legislate this relationship away. A legislature cannot take away the relationship. Okay? You can put in checks and balances to ensure that this does not result in collusion or fraud. That you can do. But beyond that, if you say, partner, you are doing, I can't talk, not like that, because somewhere they will become close. Any other matter, personal income tax matter of the MD will come to that same person. So many things will be there. You can't just like that say no. You can't put statutory control on human beings. I mean, this is the view expressed of the member of the Institute of Chartered Accountants of India, Srikanth, and not the opinion of the Board of Studies. Okay, this is a disclaimer given now. After all, I'm a member of the Institute and this is my view. Okay. Agreed. If a break is taken by the auditor, then that would be counted as cooling period. Agreed. Whatever it is, 5 years you don't come near. That's all it says, right? 5 years you don't come this side. Again go. Great. How to audit in a best way? Don't ask me. The expert who's teaching auditing, you go and ask him. I'm sure he'll give you great ideas on how to audit in a best way. This poor lunatic, how he can answer you? How to audit in a best way. For that, there are people who know it in and out. They will tell you. In Hindi also, they will tell you if you want it. Chalo. So casual, now we come to casual vacancy, right? So casual vacancy is for government company other than government company. What is a casual vacancy? Casual vacancy means unexpectedly happening, casual. Okay, meaning what? Some examples, death, incapacity, mental or physical, disqualification. You remember any of the disqualifications, if the auditor acquires, then that post will become vacant. Remember? And that vacancy would be a casual vacancy. That vacancy would be a casual vacancy. Therefore, a casual vacancy occurring in the auditor's post of a government company, who can appoint? Only CAG can appoint now. So the original auditor was appointed by the first auditor by CAG, subsequent auditor by CAG. So when there is a casual vacancy also, you inform the CAG and the CAG should appoint within 30 days. Usually what they will do, they will have a sort of a list of eligible auditors. Immediately they will nominate one more auditor, appoint it. In case of failure by the board, the CAG means failure is not a big word. In case they are not doing it, then the board of directors have to do it within 30 days, within the next 30 days. So this is for government company. Other than government company means any other company. A casual, this is where the question will come in the exam. A casual vacancy in the post of an auditor can be filled by the board of directors in 30 days. So normally subsequent auditors are appointed only by members in general meeting before the conclusion of the next AGM. But when there is a casual vacancy, such a casual vacancy can be filled by the board in 30 days. But if that casual vacancy is due to resignation, so death, incapacity, acquiring of any disqualification, etc., no problem. But if this casual vacancy is due to resignation, the auditor sends a letter to the board saying, I'm unable to continue with the audit. Kindly, I'm resigning from the post. Now, the resignation could be genuinely due to preoccupation, or it could be, for example, he might already be in 20 companies. Now he might suddenly get another company which is far better and lucrative. So man may come and say, sorry, boss, I cannot be. Kindly, I will resign and go. So he's resigning. Whatever it is, the reason for the resignation being whatever it is, usually when we resign, we will say, due to professional preoccupation, we are unable to take up the audit. We are hereby resigning. So professional preoccupation, whatever it is. Okay. So that's all we'll put. But suppose the resignation is because of serious reservations in the accounts. Suppose the accounts are having some lacuna, some mistake. This guy is finding it out. There's an unnecessary argument going on between the board and him. At one stage, the auditor is an independent professional. Yawadi will say, boss, you are right, ma, I am wrong, but you let me go here. Allow me to go here. That is easy for me. So you get out. I will resign. But the minute he resigns, the board cannot do anything. They have to go back to the members. The approval of the members is required at a general meeting, convened within 3 months of recommendation by board. Okay. So the board should identify the new guy, and then you have to go to the members within 3 months and appoint. The members only can appoint or fill a casual vacancy. Now, see, the idea is this. The board will in principle nominate the guy, recommend the guy, and he may even start working. But within 3 months, the members should approve that appointment, okay, or the recommendation of the board. And that auditor will hold office only till the conclusion of next AGM. At the next AGM, either he can be reappointed or they can have somebody else, right? This is only for casual vacancy due to resignation. Whereas my understanding, in case he is any other casual vacancy, the board will appoint. That gentleman can hold for 5 years also. My view. But commonly you can say if it's a casual vacancy, then the auditor can hold office only till conclusion of next AGM. At the next AGM, he has to be reappointed by the members. Okay. So if you have any doubts, you can ask me, because I'm going to stop here, not going to the next topic, which is about reappointment of retiring auditor and then rotational auditors and all that. So, okay, good. So somebody is appreciating my watch. I don't know. This is a Skagen, whatever watch. It's a Danish watch. My favorite. It's a simple, easy watch to wear. Okay. If a partner leaves from such audit firm, the individual capacity of that partner can be appointed. That's a good question. Yeah. Surendranji, that's a very good question. Actually, if you ask me, they only talk about joining another firm. They actually do not talk about individual practice. So to answer your question, yes, he can resign from the firm, but he can be appointed in his individual capacity. My answer. It's a good question. It's a loophole in a way. But then the company may not be willing to appoint an individual. Because believe me, today sole proprietary is only losing its charm. So they may say, no, sir, please, we can't appoint you individually. You need a firm. And so they might say no. But still, such a thing, if they agree, he can. But I don't know. That's up to the company to decide. But if he joins another firm, he cannot. See, actually, there is no clarity on this. Whether this board of directors appointment should be recommended by audit committee. But believe me, if there is an audit committee, the appointment, anyway, one of the powers of the audit committee is to choose the auditor. So the audit committee should be involved in the selection of the casual vacancy appointee also. Okay. So thank you, Mr. Chauhan, and thank you very much for expressing your feelings. I feel happy as a teacher, and I wish you all the very best. Okay, in case of resignation, does the board of directors need to recommend within 30 days or is there no? See, in case of resignation, ideally the board will recommend an auditor, and I think he will in principle start. Within 3 months, you have to call your general meeting and get the approval of the members. That's what this. See, the earlier law was very clear. The board could not appoint or recommend or do anything. The board will have to convene an AGM or EGM And at that EGM, a new auditor should be appointed by the members. That's all, straight away. And that auditor will hold office till the conclusion. Because in those days, there was no 5 years and all. So he will hold office only to the conclusion of the next EGM. But now they are putting this thing where say within 3 months you have to get approval. In the meantime, it will be recommended by the board and all. Seriously, don't know what they mean. I think what they are trying to say is board can identify the guy and he can start the work. But in the meantime, within 3 months, they should ensure that the approval of the members is obtained, is what my understanding, practically yours. Okay. Thank you, all of you, for your kind words. And still, I'm getting Ms. Divya Kumari putting all sorts of emojis there. Okay. Some of these emojis, I don't know whether they are good or bad. Anyway, thank you very much for the emojis. And to answer the last question, if an auditor resigns for 5 years, then he has to go through cooling period before appointed again in the same company. Yes, because though he resigned now, see, you know what will happen now? What you're saying is actually making sense. He is there for 4 years or 3 years, then he resigns. Okay. Then whether the cooling period will apply, yes. He has to again wait for 5 years and then be appointed as auditor. So, anyway, there is some little bit of confusion there. Because then what will happen? Everybody will resign at the end of the 4th year and get appointed for another 5 years. Am I correct? Because he will resign at the end of the 4th year. He would not have completed 5 years. So he'll be appointed for another 5 years. Like that. The cooling period won't apply to him. Like that. Somebody is asking how many courses I have done. I'm basically a chartered accountant and a company secretary. Okay. 2 institutes I'm a member. And I'm a Master of Science in Management Systems from the Birla Institute of Technology and Science, Pilani. And I am a CISA, Certified Information Systems Auditor. And I have an MSc in Psychology. The recent acquisition. I qualified as an MSc in Psychology for information. Okay. Thank you. Wonderful. Have a great evening. I think we've extended the time. So let us stop here. Inshallah, in the next class on 21st, we will complete this topic. And hopefully, on that day, I will definitely answer Mr. Boy's question. Definitely, I will. Thank you. Bye.